Hey, good morning traders. It's 8:30 a.m. here in the UK. Just taking a quick look over the markets right now, and there's going to be some really interesting setups for you to take some advantage of. We're taking a look now at the dollar index, and as you can see, every time the dollar index over the last sort of 6 months has come into this 97.50, we've had a significant drop, at least down to 96. So right now we're testing those highs again. We've rejected 97.70, and I would anticipate now that we'd come back down into at least 97, and then potentially this ascending trend line where we'll either see a dollar strength resume and the bulls come back into the market, or we'll get a break through that level and we'll head down towards 96. So how can we look at trading this? Well, first thing we're going to do is look at the correlations. We'd look at euro dollar. We can see that yesterday we rejected the even handle 1.12. Just taking some of these intraday markings off, you can see right down here we've triple bottomed. The market came down, pierced 1.12, went a little bit below, and then we've popped back up. So on an intraday basis, is there any trading opportunities? Well, simple price action here. We're just looking, we've got a nice double bottom, we've had a rejection, price failure. So all we're going to look for is either a buy stop through these highs, or we'll look for a break and retest and trade that in towards the descending trend line before we expect to see some further upside. Cable on the other hand, we may see some short-term strength on cable, but with uncertainty now of the Bank of England looking for a new governor, Brexit, etc., still looming on an intraday basis, we'll be looking for a break of the short-term trend line and looking for a move up towards 29.80. At 29.80, if I just scroll out, that'll be a lovely area to be looking for further shorts on sterling. So we'll be looking for short-term move long into here and then further downside, which goes against what we're looking at on the dollar index. But opportunity here now on Canadian dollar. We have Canadian news today, the rate statement and forecast. However, I wouldn't be surprised if there's maybe a little bit of a shock here coming from Bank of Canada, maybe a better outlook than is originally forecast. So I'm looking for short-term strength in Canadian dollar back down towards 133.88, and potentially you can see here I've marked in take profit 33.36, and maybe a further push down towards the 133 even handle. We'll be looking for just basically range trading this market until we get a break above or break below. Swissy is the one that is high on my agenda right now. This comes down to multiple of factors. One obviously is the dollar index. Two is how massively over sold stroke undervalued Swissy is right now across the market, and we can see this when we look in something called the commitment of traders report. Currently right now we're seeing similar levels of activity from the commercials that have seen the Swissy rally a good few hundred points, so I'll be looking for this market to at least come down equal parity and then potentially break through the ascending trend line we can see here and moving down towards 96. Saying that, we may get one further push up. So we do know that true values in terms of number of long contracts in the market from the commitment of traders report, we're at similar levels now when Swissy in the futures market made its move from 97 to 105, or I should say. So now what we're looking for is that market to do a similar thing. Now that it's inverted here because that's a futures market I'm discussing, not dollar Swiss spot. So looking for strength here in Swissy. Trade we sent out last night to our members club has done extremely well overnight. We've banked profits, coming in at structure which was Aussie Swiss, rejecting this descending trend line. We had a box range form, and then we sold underneath yesterday's low. We've come right into this structure point, ideal for taking profits. Now what we're looking for is a retracement back up here and selling that first lower high and resumption of Swiss strength. So finally, just going to take a quick look at gold. So as you can see, gold's been pretty bearish of late. Most of that is down to obviously the performance in the equities markets, and that in turn was better than forecast earnings reports. Last night we had a revision in the US housing market, new home sales, seasonally adjusted, coming in at levels not seen since November 2017. So what I'm looking for is a little bit of a relief rally here in gold, which would be a break above 1279 and move into this 1295 area, at which point then I think we can expect to see further shorts. Yesterday's daily close is significant for me in the fact that the way it moved down and then aggressively broke these structure lows here, but yet failed to close down here. So a break above yesterday's high, and we should potentially see 1290 at least on gold spot. So looking for a short-term rally here in gold spot. Okay, that's it from Trade and Train today, and myself, Mark Owen. If you did like the video I've just published and the information, please remember to just hit like and share with any fellow traders. If you'd like to keep in the loop and know every time we send a video or publish a video, just hit subscribe. It is free. It just means that every time we publish a video, it will come straight to your inbox without having to search. Alright traders, have a great day and rest of the trading week, and we'll see you shortly.